Welcome back everyone to the channel. I'm truly excited to have you here because today we're taking a deep and detailed look at Applied Digital, trading under the ticker APLD. Over the past few years, this company has undergone a dramatic transformation, evolving from what was widely known as a pure-play crypto mining operation into a high-performance computing infrastructure company, positioning itself at the heart of the artificial intelligence revolution. In just the last 24 hours, the conversation surrounding APLD has intensified significantly, largely due to progress updates tied to their Ellendale, North Dakota facility. That location is becoming central to the company's long-term strategy, and investors are now beginning to evaluate Applied Digital not through the lens of cryptocurrency volatility, but through the much broader and potentially more durable theme of AI-driven data center expansion. This video is for educational and informational purposes only and should not be considered financial advice, stock recommendations, or investment guidance. I'm not a registered financial advisor, broker, or investment professional. All opinions shared in this video are based on personal research, market analysis, and publicly available information at the time of recording. Applied Digital is no longer simply being viewed as a distressed miner attempting to survive a difficult crypto cycle. Instead, the narrative has shifted toward its role as a land and power infrastructure provider capable of hosting high-density GPU clusters that power artificial intelligence workloads. In today's environment, AI development requires enormous computational resources, advanced cooling systems, and stable energy infrastructure. Companies that control scalable land, access to power, and data center build-out capabilities are strategically positioned. This is where Applied Digital is attempting to carve out its niche. By focusing on high-performance computing and AI cloud infrastructure, the company is aligning itself with one of the strongest secular growth themes in the market. A significant driver of current investor interest is the company's positioning around GPU clusters commonly associated with advanced AI workloads, particularly systems built around hardware ecosystems such as those developed by NVIDIA. While Applied Digital is not NVIDIA itself, some market participants are beginning to refer to APLD as a proxy play on AI infrastructure expansion. That term suggests investors may see it as an indirect way to gain exposure to AI compute demand growth. However, it's important to understand that being a proxy does not eliminate operational risk. Execution, client acquisition, build-out timelines, and capital efficiency all matter enormously. Recently, Applied Digital secured a $160 million private placement, which has become a major talking point across investor communities. Financing events often create mixed reactions in the market. On one hand, they can introduce concerns about dilution. On the other hand, they can provide essential runway for expansion. In this case, many investors interpret the capital raise as strengthening liquidity and ensuring operational momentum over the next several months. With AI infrastructure projects requiring substantial upfront capital expenditures, access to funding is critical. The key question now becomes how effectively the company can deploy this capital to accelerate GPU hosting capacity and secure long-term contracts. Sentiment has been energetic. Market commentators and analysts have been discussing recent institutional filings and growing interest from larger investors. The conversation tone has noticeably changed. Instead of focusing on past crypto mining challenges, many discussions now center on Applied Digital's potential to leverage its physical infrastructure and power access to become a serious player in the AI data center ecosystem. That shift in perception is significant because market valuations often reflect narrative alignment with growth themes. Now let's talk about the price action and key dollar levels that traders are watching closely. After a powerful rally, APLD entered a consolidation phase. Consolidation following a strong move is often considered technically healthy because it allows the stock to digest gains before attempting another leg higher. Recently, the stock has been testing its 50-day moving average, which is widely followed as an intermediate trend indicator. This area represents a make-or-break technical zone. From a support perspective, the $8.20 level has emerged as a critical near-term support area. If the price holds above 8.20 cents and continues building higher lows, that structure could support a bullish continuation pattern, potentially forming what traders call a bull flag. In such a scenario, a breakout above consolidation resistance could reopen upside momentum. However, risk must also be acknowledged. If APLD loses the $8.20 support and breaks decisively below $7.50, that could trigger a deeper pullback toward the 200-day moving average. A move toward the 200-day often signals a more extended correction phase. That level would likely attract significant technical attention from both long-term investors and swing traders. On the upside, many traders are watching the $10 psychological level. Round numbers like $10 often act as battleground zones because traders cluster buy and sell orders around them. A confirmed breakout and sustained move above $10 could increase bullish momentum and potentially shift focus toward the $12 level. The $12 area has become a widely discussed upside target among bullish traders, though it remains speculative and dependent on broader market sentiment and company-specific developments. Looking at technical indicators, the Relative Strength Index, RSI, is currently hovering around 52. This neutral reading suggests the stock is neither overbought nor oversold. That's constructive because it indicates the prior rally has cooled off, leaving room for potential upward expansion without being technically stretched. During earlier momentum phases, RSI likely approached overbought territory, but the recent consolidation has reset that condition. The MACD indicator recently showed a mild bearish crossover on the daily chart, yet momentum appears to be flattening. When downward momentum begins losing strength, it sometimes precedes stabilization or reversal. Still, MACD signals are not guarantees. They provide probability-based insight rather than certainty. Bollinger Bands are also tightening. In technical analysis, tightening bands typically indicate decreasing volatility, and periods of compression are often followed by expansion. What traders are waiting for now is the squeeze release, which could lead to a strong directional move. The key is confirmation. A breakout above resistance with volume expansion would favor bulls, while a breakdown below support with heavy volume would favor bears. It's important to remember that Applied Digital is a high beta stock. High beta equities amplify broader market movements. If the AI sector rallies strongly, APL may outperform. If the broader market weakens, APLD could experience sharper downside swings. This makes position sizing and risk management especially important. From a longer-term investment perspective, some investors may view pullbacks toward $8.20 or even near $7.50 as potential accumulation zones if they believe in the long-term AI infrastructure thesis. Others may prefer waiting for confirmation above short-term moving averages such as the 9-day EMA before entering momentum trades. Each approach depends on individual risk tolerance and investment horizon. The larger strategic question remains, can Applied Digital successfully execute on its AI-focused pivot? Securing GPU hosting contracts, completing facility expansions, maintaining balance sheet strength, and demonstrating operational reliability will ultimately determine valuation sustainability. The market will reward results, not just narrative. As always, this discussion is for informational and educational purposes only. It is not financial advice, and it should not be interpreted as a recommendation to buy or sell any security. All investments carry risk, particularly in volatile growth stocks. Always conduct your own research and consider consulting with a licensed financial advisor before making investment decisions. Now, the big question everyone is asking, does APLD have the momentum to break above $10 and make a push toward $12 by the end of the month, or is AI enthusiasm cooling off in the short term? Share your price targets and analysis in the comments below. I genuinely want to hear your perspective. If you found this detailed breakdown helpful, make sure to hit the like button, subscribe to the channel, and turn on notifications so you never miss updates on AI and high-growth tech stocks. Your support helps this channel grow and allows us to continue bringing you deep, research-driven market analysis. I appreciate every one of you for watching, and I'll see you in the next video.